Well, hello, folks. Hello, my name is Benjamin Z. Miller. And in this video, I am going to answer the question that someone asked. And that question was they are doing some condo repairs. They're actually repairing a condo. They're investing and they're putting money into a condo. And they want to know what can be deducted and how to use the sale proceeds. Well, fantastic question. So let's talk about that. Maybe this will help some of you that are just getting started in real estate investing and you're just learning about all of it, how it works. So the question is, we spent over $50,000 on condo repairs. Can we deduct these expenses from the sale to recover our costs? And also, after selling, must we reinvest the money in another property or can we keep it? Well, fantastic question. So the quick answer, the simple answer, it's a very easy question, is that any profit you make after covering the mortgage and other sale related expenses is yours to keep. You're not obligated to reinvest the proceeds in another property. However, you may need to pay capital gains tax unless you qualify for an exemption. So let's just break that down a little bit further. So using the proceeds from a condo sale. Well, when selling a condo or any other property for that matter, you need to cover various expenses with your proceeds. This would be things like outstanding taxes or liens, paying off the mortgage and covering typical closing costs like real estate brokerage commissions, title insurance, and attorney's fees. And then after these obligations, the remaining amount is yours to do with as you wish. So there are taxes, of course, when selling a condo, while property values, they're going to fluctuate over time. But they, in general, it's like all the time, it appreciates in general over the years. So if you sell a property for more than you paid, typically this is going to incur capital gains tax. And if you've also lived in your primary residence for at least 2 of the 5 years before the sale, you might be eligible for a capital gains tax exemption if you're living in the property. So this would allow you to exclude up to $250,000 if you're single, or $500,000 for married couples that are filing jointly of the gain from your sale. To determine your capital gain, you just are going to calculate your basis. You're going to include any purchase costs and capital improvements, things like major renovations or upgrades. Maybe you put a new roof on, that would be a good example. You'd subtract any selling costs. Maybe you had a real estate agent, a talented real estate agent, help you with selling it. Maybe you had some legal fees. Then you've got some depreciation and any other things that need to be factored in there. So you're going to look at the capital gains rate, and that's typically going to range from 0 to 20%. And that's based on your taxable income, filing status, and the duration of your ownership and residence in the property, if you actually had residence in it. If you're uncertain about the tax implications of selling real estate, you should consult a qualified tax expert to help you. The nice thing about my group, you can join my group, the Benjamin Z. Miller Investor Networking Group. You can join the group. You can start coming to the meetings. We have completely free meetings every week. It's something that I put on to make investing easier for people that are just getting started out, where you can learn more and where you can network. We've got a world-class network at the Benjamin Z. Miller Investor Networking Group. It is growing so rapidly. We have hundreds of investors now from all over the world. We've got investors from Europe. We've got investors from America. And when you go there, you can meet a lot of really quality people. If that sounds interesting, just send me an email. Ben@benjaminzmiller.com. That's Ben@benjaminzmiller.com. Once again, Ben@benjaminzmiller.com. I hope that helps, and I wish you good luck with your investing.